risk management is more than just knowing what's in your books. Risk management is knowing what's in your books, knowing what you want your books to look like, and then constantly evaluating, one versus another.
Welcome back to Total Value Unlocked, the podcast where we explore the technologies and ideas shaping the future of digital assets and frontier industry. I'm your host, Matt Jiang. This season, we're focused on market infrastructure. What's broken, what needs to be rebuilt, and how we're actually going to get there. Today, I'm joined by Jake Greenstein, the CEO of Blueprint, and also a partner here with me at Hivemind, for a conversation about operational layer of crypto, staking, treasury strategy, asset management, and why this might be the edge most people are overlooking. We're also talking about this new venture we've been developing for some time at Blueprint. It's our take on solving many of the infrastructure challenges we'll unpack today. More on that later. For now, let's jump in. Welcome, Jake, to our podcast.
Yeah, thanks for having me on, Matt.
Yeah. And as always, nothing in this episode should be considered financial investment advice. For more information, the audience, please visit our website or contact Hivemind directly. So, Jake, let's start here. A lot of the attention in this space goes to tokens, narratives, and applications. In some way, people may forget that one of the biggest unlocks really comes from the good operations and infrastructures. Can you just let the audience know that why do you think operations and infrastructures are becoming some of the most important levers in digital asset today?
Yeah, so I think it's important to compare the crypto industry to the traditional finance industry when you think about operations and infrastructure. In crypto, there's simply a lot more moving parts and a lot more risk. So in a traditional finance fund, right, if you can operate a hedge fund and you can have an interactive broker's account, and maybe a PMS system, and you don't really have to worry about things like how do I stake my stocks that doesn't have any comparison? How do I custody my stocks? You're never at risk of losing a share of Coinbase,
That's
right?
true.
Whereas in crypto, you to start, you have to worry about the custody of your assets. Where are they, and is it secure whenever you transact with them? You also have more avenues for what I'll call yield generation, staking or DeFi, things that don't really have a comparison in the traditional finance industry. And then kind of more importantly, you also just have this dispersion of assets and venues and risk that I think doesn't quite map one-to-one as well. So in crypto, you might have assets on 4 exchanges. You trade with 5 OTC desks. You might use 3 custodians. You might have a bunch of ledgers in your back office which have assets that aren't supported by your custodians. So you have all these moving pieces, and crypto moves fast, right? It's 24/7. There's really no downtime. And so if you don't have the right pieces in place to monitor your risk or control your assets or deal with your data, it can drag your risk-taking team or your operations team. So happy to talk about some of that in more detail, but that's the short version.
Yeah, I would definitely want to double down on that later. But I mean, you already touched base on this a little, I guess. Like we talk a lot about crypto's potential, but when it comes to managing assets across chains, wallets, protocols, you just said, the experience often falls apart. I mean, can you just sort of like illustrate like what's the general current state of the crypto operations from your point of view?
Yeah. So first of all, it's been really easy to think about. It's really fun to watch the state of the industry grow and the state of kind of the technical stack grow over the last decade. I've been managing digital assets for the better part of a decade at this point. And what's ironic is most of the time there's a steady march of progress forwards. And I think that's true holistically as an industry, right? There's we can talk about the kind of regulatory adoption or the institutional adoption. But ironically, while there's been kind of tool development, it hasn't really kept pace with the sense of the state of the industry. So whereas 5 years ago or 10 years ago, your fund might have had one Mt. Gox account or maybe a Coinbase account. Now you have that dispersion of trading venues, the things I just talked about. But the infra for managing that hasn't kind of kept pace because a lot of this was homegrown and kind of started without the full vision of what crypto would become, right? So,
Right.
your first kind of PMS, or execution agent or your first staking provider started in a world in which crypto only existed on 2 or 3 chains. And people in crypto were trading ERC20s, or then came NFTs, and now we're doing kind of tokenized equities on chains, or people are trading crypto-like things off chain. So when you start from a place where a lot of things are homegrown, you get this set of tools that are built and cobbled together, and they've tried to keep pace, but it's not as clean as if you started knowing what crypto would become today. So that's kind of one piece of it. The other is you have all these providers that exist in their lane, and I think they're all
Sure.
really good at what they do, right? Staking providers, they do a great job of providing staking infrastructure that runs at 99.9% uptime, right? Uh, what's what's interesting is as kind of cryptos become more complex, you need more interaction between your service providers. So whereas before, your stake, you might have had just one custodian where you stake to one staking provider, it wasn't as challenging for you to get data because you just didn't have as many people involved. As that tool chain has expanded, each of those providers has done a really good job of staying in their lane, but you've started to see some bleed. Your staking providers need to provide better data. Your PMS system should probably help you with taxes, but those companies are really highly specialized to solve one problem.
Hmm. And how are the different players, like say investment firms, funds like Hivemind, and I guess other asset managers to builders, service providers,
Yeah.
how do people in the industry approaches these challenges today? Like what become the norm and what are the risks of maintaining the status quo?
Yeah, it really depends on kind of who you are today, right? So when we kind of group people broadly speaking into 2 or 3 buckets. So if you're an investment firm, I think you have a different set of obligations, a different set of resources,
Hmm.
and a different kind of mindset or partner set when you tackle this. So, as an investment firm, right, from an obligation standpoint, what you have to do is really high. You have to track every asset in your book. You have to track it, on your monthly or quarterly or daily reporting period. You have to track that down to dollars and cents. But fortunately, you have a fund administrator usually whose job it is to do that. And you also have more financial resources to pay a top tax provider or a fund administrator so that you might prepare your books, but really you have another party who's either preparing them for you or being a check and balance against you or helping really solve that issue. So oftentimes you see funds that focus on what risk is in their book, but they're really approaching it from a trading perspective, and they're leaving a lot of the back office lift to some of these other parties, even when they have their own back office team. Oppositely, if you're a kind of builder in the space, right, you might be anywhere from a big foundation to a small company that just launched a DeFi protocol. You know, your challenges are a little different. You might not have 10 exchange accounts or a huge AUM. You probably have one crypto wallet with your treasury holdings, or might
Right.
interface with your DeFi. So, but you're also way less willing to throw resources at the problem. So you're tasking one person on your team who's head of finance, hey, go prepare our books, and he's scrambling around for exports from Etherscan, or trying to cobble together free resources like Coinly. But he doesn't have kind of the sophisticated tool stack, either because time or because of cost, actually, in
Right.
many of these scenarios to help check.
Obviously been building something over the last year to help address this gap at Blueprint. For the audience who have not heard about Blueprint for the first time, Jake, can you let us know what it is and why now?
Yeah, absolutely. So Blueprint is Hivemind's homegrown digital asset orchestration platform. We think of it as having a few distinct components, and it's all built out of pain points that we've experienced as builders and operators and fund managers over the last several years, along with my personal experience of working in crypto before that. So Blueprint has kind of two main parts of the stack that we'll probably spend more time talking about, and then some other additional parts that I'll talk about in a little later. First and foremost is staking infrastructure. Hivemind, we work with a number of partners. Think your block daemons, your figments. We love you guys. We'll continue to work with you. You guys fit a great need in the industry. There's also opportunities in which we've realized that either hey, we need infrastructure that doesn't come from that type of support, or the cost model hasn't matched up, or the data didn't kind of match as well with the platforms you want to integrate with. So Blueprint, we say, hey, we want to provide staking infrastructure. We want to run public nodes. We want to run private nodes. We want to do that in a highly configurable way. If you need, on-premise nodes in a US geography for tax reasons, we'll support that. If you need to move them offshore and run a separate software package, we'll support that. And from a cost perspective, we just want to be extremely competitive because we think, and I'll get to the overall Blueprint model later, staking infrastructure is, broadly speaking, pretty commoditized, and we want to provide you higher value services on top of that as part of our kind of holistic vision for digital asset orchestration. But staking is kind of one part of that puzzle. Second piece here is a kind of fully featured PMS engine that's built for both front office users and back office users. So we want to help investment teams, risk-taking teams, think about what their exposure looks like, how to measure that against risk limits or other parameters they have on their side, and then have a real-time dashboarding and notification system so that they can manage their risk. We also want to pair that with a back office infrastructure layer where you can say, hey, we want to have a shared view of the world from between our investment team and our finance team, and track assets A to Z, track them across the life cycle of a trade, whether it's a venture deal, an NFT purchase, or a on-chain purchase, and then have your finance team have the visibility into every trade, every transfer, every order fill, so that you can then book that accordingly and track everything from your tax obligation to your monthly roll forward as you think about preparing your accounts.
Got it.
And then the last piece of this year, there's also a data and services arm where we provide offerings related to valuation services, spinning up kind of new client and fund entities, along with a bunch of other self-serve tools like an Excel data module.
A lot of the teams today already operating on legacy systems or internal tools. Are these like entrenched, and how does Blueprint fit into that kind of environment?
Yeah. So I think of Blueprint as we want to be the glue that holds your stack together. We're not trying to replace your order execution system. We're not trying to replace your custodian system. We don't even have to replace your staking infrastructure if you really like working with your partners. We want to be a platform in which you can, come plug in all your keys, all your addresses, give your whole team accounts, and have everyone have a unified visibility into your stack. And then if that overlaps with certain pieces that you find haven't been working so well, right? If you don't have a great solution for tracking your tax basis and you don't want to license a super sophisticated, expensive system to do that, you can do that within Blueprint. So I think a Blueprint is really complementary to that, to most of those pieces of the stack, so to speak.
Got it. And from your perspective, like what made it clear that this is something that we could not find in the market, that we have to build it, from the ground up?
Yeah, kind of putting on my Hivemind hat here. We've tried a number of these products in the infrastructure in the space. We are operators, and so I think a Blueprint is kind of built by operators for operators, and
Right.
that's part of the experience. So as we've tried things, we've either noticed gaps in the market, right? There wasn't anything that provided this holistic view, or kind of started from that vision, right? It's all this kind of that discrete pieces that I mentioned earlier that are expanding slowly within their vertical. And then the other thing, there's just user experience where we've seen a number of solutions that feels like, hey, they're built by engineers, but they're built for traders, and there's a mismatch of what features should exist, or even down to, hey, I really need kind of this set of buttons and customizability, or vice versa. We've seen products that have been built by trading teams for their trading teams, as one example. So they're homegrown, and we find that they lack some of the institutional features or kind of foresight that you need when you're building an institutional product.
Right. And when the idea of Blueprint first came to be, I remembered, was much more focused on the staking part of the stack, right? And since then, obviously, you have expanded quite a bit. Specifically, the staking service is now the gateway into the entire PMS and much, much more beyond, as you laid out earlier. Like something, obviously, we're calling Blueprint One. Can you walk us through that evolution and the idea behind Blueprint One?
Yeah, so you're right. Staking was kind of the first thing we said, hey, that actual problem was we were trying to track our staked balances and our stake transactions, and working with a partner, and we said, hey, can you let us know what we earned this month? And they sent us a link to a blockchain explorer, and that kind of blew my mind at the time because we needed so much more than that. We needed a detailed list of every staking rewards transaction by the date, or what balances we accumulated for a certain time period. And so when you really think about it, staking is more than just running infrastructure. Staking is also providing the data to support teams who are using your infrastructure. And from there, that was just the tip of the iceberg. We said, hey, wait a second, we can do more than staking. We can actually build a holistic kind of platform that says we want to accommodate both Blueprint staking nodes or your other providers and be that data layer. But if we're also going to be the data layer for your staking, can we be the data layer for your trading or your on-chain holdings? And from there, that grew into the vision I described, and we wrapped that into something called Blueprint One. So Blueprint One is for people who want to license all of this. If you want to access our public nodes or our private nodes and want to stake assets with Blueprint, great. If you want to also use our PMS system and license all the modules I talked about, those built for your front office team, for your back office team, great. And then that's wrapped into a unified priced offering called Blueprint One, so that you can touch all of this in one system, in one relationship with Blueprint.
Got it. And staking has gone from really a niche to a core treasury strategies in the last couple of years, but it's still pretty messy under the hood. What are some of the biggest friction points, for funds and institutions trying to engage with this today?
I think it's that data piece for staking. So, staking, I think of as kind of a couple of different decisions for a user, right? You want to figure out, hey, does the partner you want to work with support the type of node or the blockchain that you're looking for? That's kind of basic. I'll say it be a binary yes, no. You also want to make sure that they're operating with kind of the right level of uptime, though I think that's, if you work with any of the major providers, everyone does a really good job at that, providing good institutional quality uptime. And so the pieces then that then become really important are, hey, can you get the data you need from your staked assets, both from the providers themselves, or more realistically, we've seen a lot of people work with multiple providers, either because they need to hedge their risk, or they want to have multiple different commercial relationships, or maybe provider A works on blockchain A and provider B works on blockchain B. So getting access to that unified data I talked about. And then the last piece is the revenue model here. Commercially speaking, is somewhat of a pain in staking, depending on what you're doing today. We've seen some relationships in which you're paying a high percent of staked assets, and frankly, that can work against you as a fund, right? We're all in this industry because we think this is the future. We think asset prices will go up. Again, not investment recommendation here, but one thing that can be really frustrating is if the size of your fund doubles, your staked bill might double. And we think that can be a tough pain point depending on how you structured your commercials today. And Blueprint One and the way Blueprint does its pricing for staking is designed to be more cost certain for you and help guard against that.
Right. And beyond staking, I know that Blueprint also trying to aim to solve a much broader orchestration problem, right? As you mentioned earlier, when you're building something this comprehensive, like how do you thinking about like prioritizations and what piece to tackle first and what comes later and some of the sequencing?
Yeah, we spent a while building Blueprint before kind of coming to market, and that's because we think we need to do what I think of as the basic loop for the life cycle of a transaction. So kind of most of our efforts have been geared at solving that first, and then you expand. So let me say what I mean. When we talk, put yourself in the shoes of a venture investor who does a discount token purchase or an early stage token purchase. That step one is something that their venture team or trading team might execute, and they might want to book on kind of their books, whether from a finance perspective or a risk-taking perspective. That usually looks pretty simple. If it's a SAF or something, a safe, you might want to hold that on your books at cost. At some point, that token is going to launch, and then it's going to be a live token. That will impact how you price that instrument on your books. So we need to build tools for tracking that. at some point you'll probably receive those tokens if you make that investment. All of a sudden you need to track your on-chain holdings. And then you might go to sell that token on an exchange. Now you have a problem in which you need to track your tax basis from that venture investment all the way through to sale on exchange, and then the settlement of that transaction. So I think of that as kind of the digital asset life cycle. And to me, we had to prioritize features that let you account for all of that to start. Now, as we think about scaling features, it's how do we provide more bells and whistles, or how do we scale horizontally so we can support more blockchains, more exchanges, more asset types. One thing we didn't really talk about, Matt, is how the vision for asset types has expanded as
Right.
kind of crypto has been around for a while, right?
Right, because
Um,
tokenization, RWA, treasury, digital
it, it,
art, right? A lot of these categories
exactly.
are coming in.
And kind of there's two things. There's more things coming on chain, and then there's also crypto investors who are going off chain, right? A lot of crypto investors now can hold Coinbase stock or Galaxy stock, or maybe they're doing some of these DAT deals. So one thing that we're starting from a place that I feel like we have an advantage almost starting after some of these other providers is we know what the universe looks like. It's a multi-asset type world. We want to have Blueprint reflect your options, your NFTs, your stock holdings, your venture holdings, and knowing that lets us kind of build a more unified interface than a token trading platform that's now trying to kind of backfill options or backfill NFTs. So we have that vision, and then it's just a matter of how you scale horizontally.
Yeah, so you're saying is that in this space we're trying to build under Blueprint One, there could be really like a second mover advantage, right? Because you have to almost dimension all different type of asset classes as much as possible. So when you build, you already have all of this bear in mind as much as you could.
Yeah, exactly. So there's features that we haven't built yet, but are on the roadmap. But at least when we designed other features, we knew that was coming. I've said it another way as an example, like knowing that we need to integrate with TradFi exchanges and crypto exchanges lets us, putting my technical hat on, kind of have a different set of requirements or a data model so that we can present, users a more user-friendly unified interface, no matter whether they're trading tokens or stocks or NFTs.
Yeah, I mean, you just gave a very good example about that entire orchestration process earlier on. And who do you think gonna benefits the most? What type of players from the Blueprint model?
Yeah, I think I'll kind of return to that model before of your service providers, your operators, and
Right.
your fund managers. I think different people in those locations benefit for different reasons, but all of them stand to benefit, right? So just starting simply as an operating business, Blueprint's designed to be turnkey and low cost. So you can come in right away and say, hey, my finance team is you know it's one person, it really should be two or three people, and they're drowning. Can we plug this in right away and get a hold of our assets and our books and get that straightened out? That's kind of like one easy kind of version of success here where it
Hmm.
clicks. The other is for a fund. Maybe you're licensing a couple of different providers across your stack. We think we'd really benefit from having a holistic vision and then getting a chance to do that life cycle where you say, oh wait, like you know, I know tracking my, you know, individual lots from a tax basis perspective is something I've never been able to do before across the whole kind of life of a trade. And so we've seen that vision really click. We've also seen it really click for risk takers who are struggling with this. I think of it this problem of like, how do I put all my risk in one place? And so we've seen systems that you say, hey, we're integrated to these exchanges, but we have no good way of accounting for NFTs, or we have a super cumbersome way of accounting for stocks. As Blueprint is designed to have 100% of your risk, we found that has really clicked for people as well who are struggling with this friction as they move through different asset classes and instruments and venues on their side.
Got it. And for locators or funds, evaluating their own operation readiness, which a lot of sort of our investors at Hivemind do. What are the key questions they should be asking
Yeah,
themselves? What does success looks like, I guess.
yeah, that's a great question. I think the first question I'd ask kind of comes back to that risk question, like, do you have a real-time view of the world that contains all your risk? And if your answer is no, you know, I think that's a really dangerous place to be operating from as a fund, right? You might have traders making decisions without understanding the assets that the fund has. And so, if that answer is no, you really have to get to a place where you have a system that accommodates all your risk and is easy for your team to use. Because the second part of this question is like, how easy is it for your team to see your data, manipulate your data, and find data that you're looking for. If your finance team says, "Hey, every end of the month closing our books is a terrible process that takes people multiple days," I'd say there's probably room for improvement, right? There's a version of success is you should be able to, at the end of the day, have a hold on what's in your books, what transactions happened since yesterday, and whether your risk framework is still holding. And then the last question I'd ask is, in a world in which you have a front office or a back office setup, does your whole team have a shared view of the world? Something that can be really dangerous is your trading team thinks you have one thing and your ops team thinks you have another, and then your administrator maybe thinks you have a third
Hmm.
thing, or they agree with your ops team. But if you struggle with this, multi kind of view of the world problem, I'd say, hey, you need to have a world in which your whole team's logging into one platform, and you can all agree what's in your books or what these transactions
So
look
there's a
like.
single sort of truth, I guess.
Single source, that's a great way of describing it. And then, as an example, if you go and reconcile with your admin or someone else, you can say, hey, here are all my holdings. Here's a roll forward that gets you from point A to point B, and here's every transaction, on chain or off that went into that. And then you can talk, that's the data, right? And then you can solve every problem on top of that.
Right. And I guess you already touched base a bit just now, but what are you seeing or not seeing when it comes to how treasuries or
Yeah.
funds approach risk management in their operations?
I think I think again, I kind of divide it into the two camps, right? So we've seen treasuries, they often, treat their treasuries not like a fund, right? It's an
Mm.
asset of the company. Um, and frankly, a lot of those companies have, I think, more willingness to put up with pain because um, they're not built with an administrator or like a nav cycle or an audit in mind. And over time they grow to say, hey, we might need an audit, but we have to scale up our finance team or scale up our solutions. So a lot of times we've seen those kind of treasuries or funds take a more lenient approach to risk because they've just been homegrown. Where we say, hey, if you get the right tooling in place, it actually will help your team be more nimble, be more agile, be more happy, be more cost efficient. And then for funds, risk management, I think, for us, coming from a TradFi world, risk management is more than just knowing what's in your books. Risk management is knowing what's in your books, knowing what you want your books to look like, and then constantly evaluating, one versus another. Said another way, we want teams to be able to say things like, I need to cap the amount of assets I have on this particular exchange because I'm worried about, my overnight risk. Or maybe you need to say you have portfolio construction limits on the percent of Bitcoin you have versus all your other assets. True risk management isn't just making sure your assets are in secure custodians. It's saying, how do I evaluate my holdings real time versus those metrics? And then how do I notify the team and react if something is close to a limit or a limit is breached? So that's why we built kind of Blueprint around a notification engine and a risk engine and a metric system so that you can monitor this stuff in real time and then have a dialogue with your team if you need to.
Right. And let's talk a little bit about your entrepreneur journey here. Like we talk about this grand vision, what the orchestration of Blueprint One could eventually look like. Is this hard to build to date and why?
Um, I think what's interesting is Blueprint it's a class of problem that's really easy to describe, but it's hard to execute on.
Right, of
Let me
course.
give you a good example on that. Like I can tell you, goal of Blueprint is to have all your assets in one place and have all your transaction history. But that can be complicated, right? Because now you start to think, okay, that means I have to support all these exchanges, I have to support all these asset types. On my exchange, I have to support, funding transactions, deposits and withdrawals, trades, fees, half-filled orders. And so one, I think there's kind of the technical implementation problem that's you have to get over and solve. And the other is doing that in a user-friendly way. So I think kind of the journey we've had is saying, hey, as operators, we really know what we want, and then how do we go and build that? And I think it's taken a while to, you asked before how we prioritize the roadmap. We had to build all the pieces of the puzzle before we felt like it was a complete offering. Because if you were missing things along that journey, we weren't solving the orchestration problem, or we weren't being the glue that holds together all those other platforms. If you didn't really, successfully touch all those platforms or all those types of products, if that makes sense.
Right. And as you look ahead, what does success look like for Blueprint, say, in the next 12 months?
Yeah, I mean, I think there's two like kind of dimensions, right? Product side, we've been builders, we're going to keep building, we want to keep releasing new features, right? So I think, version one, of success here is, hey, how do we get people using all those features? That's the complete life cycle of the trade that I mentioned before. And then how do we expand beyond that and say, hey, once you have all your data, like what more can I do? Can I do hypothesis generation for your trading team? Can I do automatic, risk detection using AI and ML to say, hey, this transaction looks suspicious. Like, you might want to go look at that, right? So I think the product roadmap is pretty fleshed out, and we want to execute against that. The other half of this is, go to market and commercial. Hivemind has a number of great relationships in the space. We want to continue to build on those in kind of two ways, right? One is Blueprint as a partner for some of these other providers in the space. Like, can we, if you're a staking provider, can you use our staking data engine to help lift the burden on your accounting team? If you're a custodian, can you integrate Blueprint nodes, provide another low-cost offering alongside? So there's a partnership angle, which we want to go to market and try to make some relationships. And then there's also a sales angle, which is my goal is to have. I love Blueprint. I want everyone in the space to use it, and we're trying to talk to as many people as we can, get the word out, and get people demos, conversations, have people see the light, and kind of in my words of, hey, there's a tool out there that can really help with your pain points. And if it does, great. We want to have a conversation and find a commercial model that works for you. And if it doesn't, we'll take in that feedback and see what else we can build that can help make your life easier down the road.
That's very helpful and very insightful. Finally, what's the part of the market you're watching these days closely, that think that deserve more attention in general?
How can I not say DATs here? I mentioned for DATs, for digital asset treasury companies, it's kind of the TradFi concept of companies purchasing a bunch of
Of
Bitcoin
course,
or
very
ETH
topical.
or other thing on your balance sheet. And this kind of gets at this intermix of TradFi and crypto that is kind of going in both directions. So, from a crypto into TradFi like version of things, like you have all these companies that are now buying crypto on their balance sheet, or traditional funds who can invest in crypto. I think all of them need tooling and time in the ecosystem to really quickly speed through that journey I talked about and figure out, hey, this is painful and we need new
Mhm.
tools. So I think Blueprint can be a great tool for that type of manager. And then kind of the flip side of that osmosis, almost that bleeding together, is you have um, you have crypto firms then also buying TradFi assets as more crypto companies go public, or maybe venture firms start investing in these DATs. So those firms will need kind of a more holistic view on risk and asset management than a more siloed view that just focuses on their Coinbase account or their Binance account. And so I think that pairs really well with Blueprint's kind of multi-asset vision. And I think Blueprint really serves both of those bases as crypto and TradFi become more intermixed.
Great. Jake, thank you so much for joining us today. Obviously, Blueprint is still evolving, and we're very excited to share more in the coming months with our readers and audience about development, exciting updates there. So, for those who want to learn more, test it, maybe getting a demo and give feedback, like, can you let them know where they can reach you and find you?
Yeah, Jake at theblueprint.xyz. And you can find us on Twitter, you can find us on LinkedIn. Me and Matt are also available, through Hivemind as well, and happy to get in touch.
Awesome. Great to have you today, Jake. Thanks for joining, and thanks for our audience listening.
Awesome.
All
Perfect.
right.
Thanks. Take
Bye.
care.
Bye bye.